Okay, so in this video, we're really getting started on the nuts and bolts of accounting. We're going to look at the effects of transactions on the accounting equation. Now, first of all, you should remember that the accounting equation can be written as assets equal liabilities plus owner's equity. And we're going to use it in that form, and you're going to see a bunch of transactions from a make-believe business here, and you're going to see how they affect our equation. You'll notice a lot of similarities here between mathematics, the mathematics of algebra. Don't be scared though, just a little bit of easy stuff, and accounting. They're very, very similar. Okay, before I get started, I want to draw your attention to this idea of twofold. Okay, twofold means two things. Two things are happening. Now, in any business transaction, two things are affected. And you'll see what I mean when we start going through this. But just keep in your head during this video the word twofold. Twofold. Two things are happening. Alright, so first transaction. Michael starts his business, Mick's Mowing, by depositing $20,000 cash into a bank account in the name of the business. Alright, we've spoken about the accounting entity assumption a little while back. You'll know that the person and the business are two separate entities. So to start a business, you need to take money out of your own pocket and put it into a business. Alright, so the way that looks is this. Our equation, assets equal liabilities plus owner's equity. Now, this is the equation for the business. We're only interested in the business here. Now, when he deposits $20,000 in cash into the business, the account, his bank account, goes up. So his assets will now be bank $20,000. So that's the assets that he has. I'm just going to put a little line down here. There's our equal sign. Now, there won't be any liabilities at all, so we can leave them blank. But the other thing there is the owner's equity. Mick puts some money into the bank account, and you'll remember that owner's equity is the amount of money that someone has invested in a business. Okay, so we call that capital. So Mick's capital in this business is equal to 20 grand. Okay, we can just say liability is equal to 0. There's nothing there. So, twofold nature of a thing. Twofold nature of a transaction. He put $20,000 into the business. So the bank went up by 20 grand and the capital account also went up by 20 grand. Okay, let's keep moving. The second transaction. On the 2nd of July, Mick's Mowing organised a loan of $20,000 from ANZ Bank. Now you guys will remember that a loan or a mortgage is considered a liability. So let's take a look at our equation again. Assets are equal to liabilities plus owner's equity. Okay, so I'm going to start here with the liabilities and then we'll move around. The loan is a liability and the amount of that liability is $20,000. Okay, so that's our transaction done. But remember that each transaction is a twofold transaction. So if he borrowed 20 grand, where did the 20 grand go? It went into his bank account. So his assets have gone up. He had 20 grand in there to begin with. He organised a loan of $20,000, so that 20 grand also went in there. So now he has a bank account of $40,000. So there's our dual nature. He took a loan out, that's a liability, but then that money ends up in his bank account. Now he's still got owner's equity here of $20,000, so his capital is equal to $20,000. Now you can see, just like a mathematical equation, the left-hand side, the right-hand side, 40,000 equals 20,000 plus 20,000. It's always going to be that way. It's always going to work out that way. So recapping, Mick's business has been open for 2 days. He's got $40,000 in the bank. He owes 20 grand to the bank as a loan, and he has also got $20,000 of capital invested in that bank. Oh, sorry, in that business. Okay, this is where things really start making a bit of sense, I think. Let's take a look at transaction number 3. 3rd of July. Mix Mowing pays $2,000 cash for some equipment, lawnmowers, hedge trimmers, etc., purchased for the business. So again, we take a look at this. Assets equal liabilities plus owner's equity. Now, the liability, he didn't borrow any money here, so that's going to stay the same. His loan is going to be equal to 20 grand. Now, he didn't add any more money to the business. He didn't pull the money out of his own pocket. So the capital also stays the same. That's going to be 20 grand. Now, at this point, you might be thinking, oh, wait a minute. Every transaction has to be twofold. And now loan hasn't changed and the capital hasn't changed. So our liabilities and our owner's equity haven't changed. Where is our twofold nature going to be? Well, let's take a look. If you buy $2,000 worth of equipment, lawnmowers, hedge trimmers, etc., something's going to happen here. 2 things are going to happen. 1, your bank account is going to go down. So your bank account was $40,000. You spent 2 grand. So your bank account now is going to be $38,000. The other thing that's going to happen is you've got a second asset class. You've got equipment that suddenly appeared. We'll just call it EQUIP, equipment. And that's going to be $2,000 worth. Okay, so in this transaction, very, very simple transaction, but 2 things happened. Our bank account went down and our equipment went up. Twofold nature of a transaction. And that's what accounting's really going to be all about. If you can start to understand that each transaction has a twofold nature, 2 things are happening, then you're really on the way to making a lot of progress with accounting. Okay, last one. Mix Mowing purchases a trailer for $2,500 from Bob. Bob pays a deposit of $500 and agrees to pay the remainder of the debt at the end of the month. Oops, this question's a little bit screwy. Let's fix it. Mix Mowing. That makes more sense. Okay, that's better. Mix Mowing purchases a trailer for $2,500 from Bob. Mix Mowing pays a deposit of $500 and agrees to pay the remainder of the debt at the end of the month. This happens really, really regularly. You buy something, you put down a little bit of money, and then you pay the rest later on. Okay, again, let's do our equation. Assets equal liabilities plus owner's equity. Now let's think about what's happened here. His bank account would have gone down because he paid a deposit of $500. So the bank, it was $38,000, but he's lost $500. So now it's going to be $37,500. Now, his equipment, depending on how we want to do this, let's leave equipment and trailer as 2 separate assets. So equipment stays the same. It's $2,000. Now we get a third asset. Our third asset is our trailer. And the trailer is valued at $2,500. Okay, so 2 accounts have been changed so far. The bank account has dropped by $500, and the trailer account, which is newly created, has gone up by $2,500. Now, problem here, we have 2 accounts changing, so twofold, that's awesome, but it's not balanced. $500 has gone down and $2,500 has gone up. Now, the other thing that's changed are our liabilities. We have a loan valued at $20,000. Okay, and the other thing that we have is a liability to Bob. We now owe Bob $2,000. And our owner's equity stays exactly the same. That's it. Now, if you look at the left-hand side of the equation and the right-hand side of the equation, you add up all your money, 20,000, 20,000, 2,000, and you add up all of this, 37,500, 2,000, and 2,500. If you add up this side, you add up this side, they're going to be equal, and that's important. This has been the longest video that we've made so far, but it's a very, very important concept. Any transaction has a twofold nature. At least two things are going to change when you transact. In that last transaction, you saw even three things change. And this is going to be our beginnings of truly what it means to do accounting. Okay, so that's the effects of transactions on the accounting equation.